The trend is your friend. Ride it until its end, until it reaches its bend. Well, Ethereum has reached that bend. So we're now looking for that trend reversal, and we've got the first signal. So today we're really going to double down on Fibonacci price ratios, looking at the relationships and why there's a powerful psychological resistance zone or support zone where we're going to get a high probability reversal. So if you like today's content, like, subscribe, hit the bell notification. My name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to trade currencies, but now exclusive on cryptocurrency. So let's dive into Ethereum. So yesterday, we really went into detail with Elliott wave patterns. It's one of the best ways of reading the markets. And we had already 3 major degrees of counts. We're going to touch upon it today, but really this is what is calling a wave C. And this yellow part is a wave 5, and then the red part a wave 5. So it's a 5 of a 5 of a C. Now what that means in English is basically markets tend to unfold in particular patterns, 5s and 3s. And they happen in different degrees. And here we're looking at 3 degrees of wave counts. Very important, very powerful. But when coincided with Fibonacci price, which is what we're going to dive into today, then it takes it to a whole new level. So if you haven't watched this, worthwhile watching yesterday's video on the pattern. And if you want to take your Elliott wave count to the next level, you can take my Elliott wave masterclass, which is in the link below, and it'll take you to a whole new level when you're looking at charts with a whole new perspective. Because what we're really doing is really just measuring the psychological mood of the buying and selling behavior. In other words, how is the mass herd psychology feeling, which means what's likely to occur next. So what we're going to do with Ethereum is we're going to jump into a weekly chart. It's a daily chart. I'm going to jump into a weekly chart. It just allows them to get a bit more data onto the chart. I'm going to really zoom all the way back to 2017. So this is what we did the other day. And we said, look, we got this macro wave count, right? So we said, look, markets tend to move in a 1, 2, 3, 4, 5, followed by a typical A, B, C correction. So we're going to zoom back into this in a second, but what I want to do first is we're really going to do Fibonacci ratios on 4 degrees of counts today, 4 degrees. And when they coincide, overlap each other, it means it's more relevant. It's more relevant. One by themselves is useful, but not that powerful. But combined with pattern and multiple degrees, then different ball game. So what we're going to do first, and by the way, I also covered the Fibonacci price in the masterclass, Elliott wave and Fibonacci price. So if you're brand new to this, and even if you're not, you want to take yourself to the next level, this is really, really important to learn. So what we're going to do is we're going to start with Fibonacci retracements. Right, retracement. I'm going to do it quite relatively fast. We're going to take this low from the 2017 low. I'm going to take it to this high. Right, so we're going to take that high. So now we've got these retracements. Now I can zoom in like this. It just makes it easier for us to see. I can actually now jump back into the daily chart because I just needed to get that data in play. So what we have here with these 3 lines is basically the typical minimum, typical, and maximum wave correction of an ABC. So this is the typical. We've clearly surpassed that. This is also very common, 62%. We've passed that, and the typical maximum is 78.6%, which is this red line over here. So this is the one that we want to pay attention to, and the one we're going to keep because we're in that zone. You can see we're in that zone. So this is a typical maximum. So I'm just going to get rid of the other 2. I'm going to do it at a reasonable pace today. Right. So now next what we're going to focus on is the blue line. Right, the blue line. By the way, I'm trying to color code to make it easier for you. So let me know, are you finding the color coding helpful? If yes, just type in the comments, yes, finding it helpful, because we're going to do 3 degrees of counts, the blue, the amber, and the red, right? And it's just multiple degrees. So what we're going to do here is we've got a pattern which we discussed yesterday called an ABC correction, right? And what that means in English is this wave A and this wave C, they often mimic each other, right? Wave C's are often equal in both price and time. Today we're going to focus on price with wave A. So what we're going to do because of that, because we're looking for high probabilities, we're going to measure wave A. I just want to make sure I got this higher. I'm just going to move this a bit higher over here so I can just make sure I can see this high and get as accurate as we can. We're going to project it from here. So I'm going to take this high, I'm going to take this low of wave A, and then I'm going to project it from this wave B. And the key ratio that we want, the most important one, is the 100%. And we can see it's in that range, right? Very relevant, very, very relevant for us. So that's the blue. Now we're going to move to the amber, right? So I'm going to zoom in a bit more. But there's a couple of other things we could do as well on the blue. One other really important one actually is the external retracement. I will do this one because it can be really, really useful for us. Very reliable. And the end of a wave C for external retracement is 1.618 is a typical maximum, and minimum is 1.272. You can see we passed the 1.272, so the 1.618 is really, really important. So now we've got a cluster, right? Really, really powerful information, and these are leading indicators telling us that it's likely we are seeing Ethereum, and we're going to drop down to a low degree time frame for our entry setup. How do we go along on this? But what we got now is very powerful. We've got macro retracement. We've got the blue intermediate count now. So we're looking at the intermediate count. And now we're going to go into a micro count. We're going to look at the amber. So what does the amber tell us? Right? The amber tells us wave Cs, which is this blue line over here, typically break down to a 1, 2, 3, 4, 5 wave sequence. And it's pretty clean. It's pretty clean. It's pretty textbook, right? And we can use this information because these ratios, these waves, have a relationship to each other. And I'm going to focus on one of the most powerful ones and one of the most reliable is the relationship between waves, beginning of wave 1 to end of wave 3, and the direct relationship to wave 5. Right? What it means in English, I cover this in the masterclass, but I'm going to give you a mini masterclass here. We're going to measure wave 1 to 3, and we're going to project it forward from the top of wave 4, and we're going to have 3 ratios, 38.2, 62%, and 100%. It's really the 38.2 and the 62% that are most relevant for us. And we're going to see if it clusters over the other ratios, which again tells us that it's relevant. So we're looking for a cluster. So wave 1 to 3. Let's make sure I get that. Projected from wave 4. And what we're going to focus on is the 38.2. You can see it's in that range, and the 62%. And we can ignore the 100% because it's really outside of the range. Right, so now we've got this really clean, clear zone of pattern and price. Right, pattern and price. So can we do one step better? Well, we can. We can drop down to a sub-micro degree count now. To be honest, you only really need 2 degrees of counts. So it's a bit of overkill. But it can be really, really relevant when we're looking at really getting a tight entry point. So now we're just going to zoom into the red. So let me know, are you finding the colors helpful? Because sometimes I used to keep all the colors the same. Is it helping you? If yes, give me the thumbs up. If no, just say no, because I'm always looking to kind of make an improvement with this as well. So when we're looking at this red lines, it's not confirmed. So I'm going to put a question mark here. This is important to note as well. This is not confirmed. So let me just put a question mark. It says we're waiting for a confirmation. I put this black line in yesterday that just says, if I can grab it, it doesn't let me grab it. This black line over here, which is the swing high, that will be a first indication that we've got that correction complete. So what we're looking at here, well, we're going to do the same thing again. We're going to do the same thing, but on the red rather than on the amber. We're going to measure the red beginning of wave 1. We're going to take it to the end of wave 3 and project it from the top of this wave 4, extreme. And we can see that the 38.2 is literally tagging that low over there, and the 62% is down here, which is not as relevant, so we can get rid of that. And I'm going to do one last one, which is worth us doing, is called the external retracement again, but of wave 4. So I'm going to actually zoom in a bit, and then we're going to drop into a lower degree time frame. Now, these are not just random lines, by the way. These are huge psychological resistance points that we're looking at, or support zones from mass herd psychology. And it's really this. Now we're getting a really tight cluster. So we're going to do one more. And it's the external retracement. It's the end of wave 3 to the top of wave 4. And the 2 ratios is 1.618, and it's right in that zone, and 1.272. So you can see that supports our case. So this is a very highly probable, never guaranteed, but highly probable end of a whole wave 5 of a 5 of a C of an actual macro wave 2. right? But we don't need to get into too much detail. I covered it in the masterclass, which is in the description link below. So what we're going to do now, so what we have now, so what we have is pattern position telling us is looking like we're at an end of a major trend. And what does that mean? What does that mean in English? Like, why is that important? Well, let's just zoom out for a second. Let's just get the ABC correction in view. So what I want to emphasize is, actually, I'll do it like this. In fact, I'll do it like this. What I want to emphasize is, after an ABC correction is complete, so if this ends up being an ABC correction, what typically follows is a continuation of the prior trend. And more often than not, it'll be to all-time new highs, basically higher than the beginning of the correction, which is all-time new highs for Ethereum. So it's likely we're going to see Ethereum go over $5,000 if it unfolds like this. So this is why we're looking at this. This is the purpose. We're going, can we get a real tight entry, whether you're trading this or you're just buying to hodl? Right, so what do we do next? So what we're going to finish on today is, do we just wait? Do we just wait for this high to get taken out and then buy at a later date? Or can we buy earlier? So this pattern over here is not very clear. How is this unfolding? So what we're going to do to finish up today is we're going to jump into an hourly chart, which is going to let us see this part in a bit more detail. So I'm going to make it clear for you what we're going to look at, because sometimes it's not as clear. I'm going to put this in a box, and I'm going to color the box. Let's just color it. Let's color it green. Right, so now I'm going to drop down to an hourly chart. So I just wanted to make sure this shows on the hourly chart. Yeah, that's fine. Okay, we're going to drop down to the bottom right hand corner. And let's see if that worked. Nope, that didn't work. So what I was trying to do was make sure this green box shows. Oh, here we go. That's why. Okay. The green box on the daily over here, we're going to drop down to the hourly in the bottom right. So now we're looking at hourly data. This represents the same amount of time and price action. So bear with me. I'm just going to clean this up. I'm just going to quickly get rid of these on the hourly chart. Great thing about TradingView is you can double click on these and say, I don't want these showing on the hourly chart. I want these lines that only show on the daily chart. So it keeps our hourly chart very, very clean. Right. Simplicity is the ultimate sophistication, and I love to keep things absolutely simple. Simple, clean, crisp. Right, okay. All right, so now I'm going to get rid of this as well. So we're going to finish on this. We're going to do this quite sharp. This is a couple of pieces of key information that I wanted to get across to you here with Ethereum. We're going to use something called, well, basically what we just did, the whole thing that we just did, but we're going to do the exact same thing on this time frame. So what do we see over here? Do you see any pattern on the upside? Do you see any pattern on the upside? Well, what I see is a nice wave. 1, 2. Well, it looks like a pretty clean. We call this a 3 or a 3. You know, we could argue both. Let's just have a quick look. I'm going to go with either or is fine. It doesn't actually matter too much. You know, it could be an ABC of a 4 or a 4. Again, doesn't matter too much. And then a 5. So what are we anticipating next? Well, I'm anticipating a correction. And you can see it's forming already, right? It's forming already. It looks like an A, B, C. So how can we get a bit more accurate with this? So I'm going to use something called Fibonacci time next. Now, we're going to measure a time ratio where most corrections complete, right? The minimum amount of time for a correction to form. So what we're going to do is we're going to take this low, or the beginning of this sequence, to the top of this sequence, and we're going to project the two ratios. The two key ratios that we want is 38 and 62%, right? 38 and 62%. So you can see that green line and the red line on the right-hand side. That's really important information for us. Then what is the typical minimum price? So now we're going to do that retracement. Same thing that we did on the macro, on the daily chart and the weekly chart, but we can do it on this hourly chart. And we'll want 50%, 62, and 78.6%. So now we've got both price and time ratios and saying, ideally, what we want to see is a three-wave correction, ideally in an A, B, C style fashion. That would be most common. That goes a minimum of 50% and a minimum of 38.2% time, which is later on this evening. But so what does this look like? This whole movement here to the downside. Well, it looks like the original move to the downside. We'll probably get a correction to the correction and then a third move to the downside, and the momentum will support that as well. So there you go. That's Ethereum. So we did some high-level stuff today. It was pattern, which we really covered yesterday, but we did some today as well. Price went into degrees of like 3 degrees to 4 degrees of price ratios. We did a bit of time. So now this is a stand aside. Let's wait until an ABC correction forms, and then we'll relook at this as well. One other thing that I wanted to bring to your attention on the top right-hand corner, which is the daily chart, is the momentum is now officially bearish. Well, it's practically the red and the blue are touching each other, but by tomorrow, the blue is going to be below the red. What that tells us, the rate of change, which is what momentum measures, it indicates to us that we should anticipate 1, 2, 3 days, give or take, of sideways to down movement. And we want to trade in the direction of the higher degree time frame. So here it's pointing down, or it's like overbought and it's pointing down to say, look, the odds are against going long right now. So what would be good practice is wait for the momentum to go below this black line, as in this black line over here, which is the number of it is 25, below 25. This is stochastics RSI, by the way, for those that use TradingView. Settings on the daily is 8533. You can copy that. What we would then want to look at is if and when the momentum goes below this black line, is to look at the hourly chart again. And in the ideal world, we would have an A, B, C correction below this 50% and longer than this 38.2% time in this range. And then we can look for a high probability long trade setup. Something like going above this swing high would be a good long trade setup. Or better would be if this part of the market, if it tends to break down into like a 5-wave sequence of some sort. Let's say it broke down like this, then we could go long on a swing high like this, getting closer to the market. And if it did that as an entry, the stop loss will be no lower than this low over here. Right? So it's a very, very tight entry. Now, if we managed to do this and it took off, what kind of wave are we looking for? Let me show you this, right? This is going to blow your mind. I'm going to have to really, really zoom, because we had a major correction. This is no joke, right? This is a major Ethereum correction. So we're talking about all-time new highs. We're talking about a big movement, like a big, big movement. And the big money is made in the big movements, in the larger degree trends. So I only go into an hourly to get a tighter entry, but then we want to go back to the daily and ride this bigger degree trend. And if it takes off, what would it look like? Well, more than likely, again, I'm just speculating here, but this initial move will be like a wave 1. We're expecting like a wave 2, a nice wave 3, explosive, 4, and then 5. And then we would either look to be taking half of our profits around here as insurance, get risk-free, and so on and so forth, lock in some profits, either at this wave 3, depending on how it unfolds, or we'll let it unfold until the top of the wave 5, and we'll look for compounding positions, or as this unfolds. As this unfolds, there'll be pullbacks, there'll be breathers, and we'll get more into our position. And basically, the trend is your friend. Ride it until its end, until it reaches its bend. So today was like a mini masterclass in itself. So do take my Fibonacci and Elliott Wave masterclass, because it will take your thinking to the next level, where you can read the markets like a pro and be 2 steps ahead. Because most people are actually 2 steps behind the market, and they don't have an objective way of viewing the market. What we are looking at is momentum, pattern, Elliott waves, ideally on 2 or 3 degrees accounts. Today we did like 4 or 5, but 3 is more than enough. That's what we covered yesterday as well. Price on 2 or 3 degrees. That's what we did today. And then time. We did some time analysis. There's a few other things that we could do, But as the data unfolds, we'll jump into that as well. So if you found today's video useful, I really appreciate if you give me a thumbs up, because YouTube likes it when you give me a thumbs up. It says, look, Jigay, your content is half decent. People are getting some value. So if you do, give me a thumbs up. That'd be much appreciated. Let's finish on a quote. Quote of the day is Michael Jordan, chapter 1. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I failed over and over and over again in my life, and that is why I succeed. Now that is the art and the science of being a successful crypto trader, is to be able to identify the high probability shot, which is the setup. Take the shot with confidence in a fearless manner, but with acceptable capital exposure, knowing that you can miss the shot. You can lose 2%, 3%, 1%, whatever your risk management is. But if the shot goes in and we get to ride that trend and we do that consistently, that's how we make some really, really good money over the long term. And most people overestimate what they can do short term in terms of weeks, months, and even 1 or 2 years, and really underestimate what they can do long term, 3 years, 5 years, 10 years, and beyond. So really get that long viewpoint thinking, and let's ride the trend. So Ethereum, high probability trend reversal. It looks like we've got that 5-way sequence to the up, which is an indication that we've got the trend reversal. Never guaranteed. That's why we have a stop loss. We're waiting for that ABC correction to complete. So if you have found value today, give me a thumbs up, like, subscribe, hit the bell notification. We may jump into Ethereum again tomorrow, or we might look at another coin. I'll just check on how it's unfolding. If the ABC correction is unfolding, we might touch base on that also. So let me know how you found today's video. Thumbs up, and I'll see you tomorrow.